Hey there everybody, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Happy Friday once again and hope everybody's doing fantastic. Well, today's Java with Jared is coming to you a little bit later than I normally get them out because we broke through some pretty important technical levels. I wanted to see if the market held, and I'll get to that in a second. But rates did finish the week better than where they ended last week. And previously, about 4 weeks ago, we started a slide for about 3 weeks. Last week, things changed and we started to improve, and we saw a continuation of that this week. Now, we didn't have a whole lot of economic data that was released into the market. We did see housing starts come in hotter than expected, showed an increase of about 8.3%. Building permits came in also a little bit hotter than expected at 7.5%. So both those are good. The builder sentiment was a little bit weaker than where it was the previous month. So July came in down about 2 points. Builders are still very optimistic, just not as optimistic as they were the previous month. So all that was actually pretty good. But the real important news here is that mortgage-backed securities actually broke through the 200-day moving average. We did also see the 10-year Treasury yield break beneath the 200-day moving average. Both of those are a really good sign. And we've held those levels for a couple of days now, and so there's maybe some room to run, and things have changed a little bit. We're back on track to where we were just a couple months ago, and there's maybe a little bit of room for interest rates to improve here. But next week we're going to see a whole lot of important economic data, and we're going to see the Fed meeting. Now, no one is expecting that the Federal Reserve will actually change short-term interest rates, and there's no interview afterwards by the Fed chairman. They'll be releasing a statement. What people will be watching for is if there's going to be any further clues as to what's going to be again happening with some of this unwinding of debt. But there's not a lot that is really expected, probably not going to be a whole lot of surprises there. But we'll keep you informed as to what's going on. But the bottom line is rates have improved over the last couple of weeks. Things are looking pretty good. We're now back beneath that 200-day moving average on the 10-year Treasury, which is great, and above the 200-day moving average on the price of mortgage-backed securities, which is also really good news. But things are going to be volatile here. We're probably going to be bouncing back and forth beneath these levels until there's maybe further direction as to not only what's going to happen in September with the tapering, but also how the market's going to react to that. So again, just advise your clients to take advantage of these rates when we're at these levels. If you have any questions, please feel free to give me a call. Thanks for joining me with Java with Jared. We'll keep you informed as to what's going on in the week ahead and what happened with the Fed meeting. And if you have any questions or if you have any clients that need any help, we're just a phone call away. Thanks. Talk to you soon. Bye-bye.